Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, June 24th, 2013. Well, a continuation of the trend to the downside today, a candle with a lower high and a lower low. Previous day's trading we saw an indecisive spinning top type candle as the trend continued down, and we saw the market find some support at the bottom of the cloud. The previous day's trading did set the market up for a potential change of trend to the upside, a potential higher high and higher low, because the spinning top type candle is an indecisive candle, and it did raise some doubt about the potential for the trend to continue to the downside. But what we were looking for was confirmation of a change of trend, and the likelihood of that happening, considering that the market had the 1600 round number level of resistance close by, it was unlikely that that was to happen. A lot of indecision in the market at that point in time, but today we've seen the sellers come back into the market and trade the market lower with a lower high and a lower low. There was potential for support around the 1576 level, but the market has closed down below there, and the market did test down to the important 1555 level, and there was some rejection from around that area, so it does raise some doubt about the market continuing down. Now we do have a black body candle, and the black body denotes bearishness, and it denotes the sellers making net bearish progress between the open and the close. So they've continued some downside momentum in net terms, but nothing in line with the previous two black body candles that we saw here, that where the market sold off through the important $1,600 level of previous support. For that previous candle, we saw the market rally to the 1600 level and sell off, and that will be a strong barrier to this market moving forward. It also coincides now for tomorrow's trading with the bottom of the cloud, and very, very solid resistance overhead for this market around that level. With the market, however, closing around the midpoint level, it does suggest that the sellers aren't terribly strong in this market. So we have seen the sellers lose the control that they had a couple of trading periods ago. For the previous period to today's trading, the buyers actually attempted to take control, so the sellers failed to maintain control. And today they've done the same. They've closed around the midpoint level, so neither the buyers nor the sellers have taken control of the market at the close. And we did see the sellers lose commitment, as I've mentioned, around that 1555 level, 1560. So there is some doubt about continuation of the trend, but as I have mentioned, any rally may be short-lived because of this very strong barrier close by to where the market is trading at the moment. Now, in terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend to the previous time the market is trending down. And for the previous day's trading, we saw this indecisiveness around the 161.8% level. It certainly did set the market up for that potential change of trend, but we did have to worry about the market trading near the cloud, and the cloud, as we know, can hold as resistance. We have seen the trend continue down. There is potential for the market to trade down to the 261.8% around 1547, so we do need to be aware of that. But with this price rejection coming into this market, it doesn't offer us a great deal of certainty for the market trading down to there. It does raise some doubt about the continuation of the trend to the downside, but by the same token, we aren't seeing any strength from the buyers at the moment. Examining now the Fibonacci retracement, and here for the previous day's trading, we saw the market once again active in an indecisive manner around the 161.8%. We saw the price rejection from there. It did set the market up for that potential change of trend, but today we've seen the market close below the 161.8%. We do have a target down around the 261.8% at 1533. There is some doubt about the market testing down around that level, but we aren't seeing any strength from the buyers at the moment, so a lot of indecision in this market at the moment. The black body does suggest that the sellers are slightly stronger than the buyers in the market at the moment, so we would be favouring the market to continue trending down. Now, in terms of Ichimoku, quite a change in sentiment in this market for today's trading. It really does say something about the change of sentiment here with the market trading down below the cloud. That is an Ichimoku sell signal. Breakout down below the cloud does give us a sell signal in terms of Ichimoku. And what I tend to, or I like to see, is a bearish signal when we do have a close down below that cloud to give us a lot more confidence in the signal. This is on a not a terribly strongly negative candle. It is a black body candle, so the sellers have continued downside momentum, but as I've mentioned, the sellers have failed to maintain control. But by the same token, the buyers aren't strong in this market, so there is some doubt about the potential for the market to continue down. There is a possibility of the market rallying, as I've said, to find resistance around the bottom of the cloud, and that's up around the 1600 round number level of previous support. And likely scenario would be for the market to potentially rally and then sell off again. And if we do see solid bearishness coming in there once again, we could see the market trading lower. Just looking at the position of the price action with regard to the Kijun-sen, the pink line here, we are trading down below there, and we have been for a couple of trading periods, and we had a bearish breakout down below there, giving us a sell signal, only a weak one. And it does tell us that the market is negative or bearish in the medium-term time frame, and the market is trading down below the Tenkan-sen, the green line here, so bearish in the fast-term time frame as well. Interestingly, both of those indicators, the Kijun-sen and Tenkan-sen, are pointing down rather sharply, so it's reflecting some solid downside momentum, and that does add some weight to the potential for the market to either continue trending down or for the market to rally and then sell off once again. If we do see that rally, it will be potentially short-lived, solid resistance overhead. Looking to the Chikou span here, that's below the corresponding price action, so it's confirming negativity that we're seeing in all three timeframes, and does suggest that there is a good likelihood of the market testing to the 1555 level or below. So just down below that 1555 level, we do have strong support at the 1540 level, a previous area of strong support, and we do need to watch that. But really a market where we have had a sell signal with Ichimoku, but we do need to be a little bit wary of it. If you are a little bit more adventurous, it is a sell signal that could be taken. But as I said, greater confidence on a solidly bearish candle and a solid close down below. Potential for a rally to 1600 and then another sell-off.